Hello everybody, this is Toni Turner and welcome to the market now as of Friday, August 16th at about noon Eastern. Well, the hopes of a more official stimulus for the economy and the easing of a bond market rally is driving a broad-based rise in the U.S. stocks so far today as a bruising week for the markets draws to a close. Wall Street's three main indexes have fallen at least 1.5% since Friday, on track to rack up their third consecutive week of losses as investors worried about the risk of recession and U.S.-China trade tensions. China's state planner said this past night that it would roll out a plan to boost disposable income this year and in 2020 to spur consumption as the economy slows. Investors are also expecting further interest rate cuts from the Federal Reserve and moves by the European Central Bank next month to fight softening growth. And on all of that, let's move on to three charts that could give us some insight into the week to come. Now, as we always do, we're going to look first at a chart of the S&P 500 spider, symbol SPY. This is a daily chart, and of course, this is the exchange-traded fund that closely follows our benchmark S&P 500 index. So, after making an all-time closing high on, let me get my pointers up here, after making an all-time closing high on July 26 at 302.01, and that would be up here. Since then, we've had quite a ride. As you can see, the SPY, of course, the S&P 500, has come down all the way down to this lows down here at about 280, right around that. Today, when I captured this chart, the SPY was trading at $288.58, or about $28.85 on the S&P 500 itself, a little bit higher than that. Now, for the past two trading weeks, the SPY, as you can see, it's moved down dramatically. The inverted yield curve is part of the problem here because many people think that can cause a recession. That, on top of the China trade tensions, has sent the market lower down the end of July and the first part of August here. And as you can see, the SPY has moved up from these lows down here, about 282 or so, moved up, hit its head on the 50-day moving average, the green line, which is coming in here now today at $294.07. So again, the SPY is trading under the green line, under the 50-day moving average at about 288.56 right now. We do have the 200-day moving average, the long-term moving average, coming in at 279.46. So what we have here is the SPY. As you can see, it's caught in a range here between about 282 or so, or we could just make it simple and say between the 200-day moving average and the 50-day moving average. Now it's trading just above here. We see the 14-day RSI down here. This would be the oversold level, and it's trading above that right now in a neutral zone on the RSI at about 45. As you can see here, the MACD has finally given up and moved down below its zero line. Many people consider that to be a sell signal, but we'll wait and see here what will happen in the coming week. We still have plenty of price support here. We still have it again at about 283, 284, 280, and 279.46 where this 200-day moving average is coming in. Now, the price point or the support line, I should say, that's very important is down here at these May lows at about 274. This is a point here that it would be best for sure that the SPY does not go below. Call it 275, that would be 2750. On the S&P 500 itself, we can call it that, or just a little bit below it. We don't want the SPY or the S&P 500 to move below 275 or 2750, as that could certainly cause another leg downward. With the trade tariffs yields dropping, and general global unrest, we certainly have a lot to keep an eye on. Now, if we get some relief in any of those areas, certainly the SPY could head back up toward its 50-day moving average and perhaps climb over it. But as I like to say, what we need to keep in mind here is that many times, many years, I've seen this over and over in my 20-some years in the market, August and September can be really cranky, ornery months in the market. And it's proving to be so this time. We've had a real nice ride here since the December lows of last year. And we've had a real nice up into April with a little dip in May, of course, on more trade tariff problems, then back up again. So we really can't complain too much if August and possibly maybe September again get a little cranky. We'll get things straightened out, and then we'll head into the season of the year. November, December, January are typically the best months of the year. So, of course, we'll see what happens next. Our next chart today is a daily chart of the iShares Russell 2000 ETF, the IWM. Now, as you all know, we watch Toni and Tony's Market Club. We watch the IWM, the Russell 2000 ETF, for a real good reason. It's because it can act as a leading indicator for the broader market. Now, small caps typically are valued at between $300 million and $2 billion. And so this is a collection of stocks, about 2,000 of them, that are a little different from the big large caps and multinationals that we get in our S&P 500. These are companies that trade mainly in the United States with their goods and services. They don't have access to big dollars. Interest rates do affect them, although right now you'd think with lowering interest rates the IWM would be very happy, and it may get so. We'll have to see. Now, as at the IWM, as you know, rebounded in a very strong uptrend from the December lows of last year. But unlike the SPY and the NASDAQ, the IWM didn't return to its all-time highs, and actually they were back in 2018. Now, when I captured this chart today, the IWM was trading at $148.19. It made a relative closing high on July 30th at $157.84, and that's a lower high from back here in April at about 161. So we've done a pattern about like this so far. This is coming in straight line pretty much at about like that. So we have support here down at 145. I've been watching this line of support for quite some time. So as you can see, the IWM is also below its 50-day, but it's not caught between that and the 200-day. It's fallen below the 200-day moving average. Now the RSI down here is just running up just barely on top of the oversold line. The IWM actually hasn't become terrifically oversold as of yet. Fingers crossed it doesn't. So it is, again, it's got the support here at 145. The MACD, of course, is below the zero line here very slightly. So where the crunch comes in here is we want the IWM, for the sake of the bulls in the market, to stay above the 145 level here. Potentially, if we get some good news on trade wars in the coming week, it could bounce higher here. It could head back up. If you look down with me here at the volume, you can see that it's got quite a bit of volume coming in here, but we can't say it's all buying volume because it has dipped, of course, in this past week. So some of that was certainly selling volume. Can't argue that point. But again, keep an eye on 145. That's the point we need to keep an eye on. If the IWM falls below that line, I'm going to get a lot more conservative and defensive. If the IWM can bounce higher, then maybe we can all exhale a tiny bit and start looking around for some new opportunities. Our final chart today is the Invesco Solar ETF, the TAN. Now the TAN is a global fund. It has 22 holdings. The top components are comprised of IT, utilities, industrials, and real estate. Kind of interesting. The top components in it are Solar Edge, Enphase Energy, First Solar, Xinyi Solar, and SunPower. Now, looking at this, so you think, well, look at it, it's gone up so far. If you look at a monthly chart, you would see that TAN made an all-time high at about $307 back in May of 2008. Of course, if anybody here remembers May of 2008 or the middle of 2008, you know that it was not a good year. But that was shortly after TAN's inception. Then it fell really hard. And our recent lows that we can see here, it made a low last December at about 18. Now it has climbed since then. As you can see, TAN has walked up its 50-day moving average pretty nicely, made a few dips here and there, but walked up its 50-day moving average pretty nicely. And when I captured this chart today, the TAN was trading at $29.89. So what I thought I would do here, we see how it bounced up in recent weeks, probably on some earnings from some of its components. They've done pretty well this year. And today it's making actually a nice setup here. It came down and moved down to the 50-day moving average, the green line, at $28.75. Came down yesterday to sit on that line. Today it's bounced a little higher. Again, well, now trading at $29.89. If it can remain positive into the coming week, I may add a small position of the TAN to my portfolio. I'm going to put an initial stop down here as a close below the 50-day moving average, and again that now comes in at $28.75, the 50-day moving average. I realize that's a very close stop, but at this time, the way the market's acting, I intend to keep my risk low. Please remember, they'll always let you buy it back, okay? I'm not going to stay in anything that's falling dramatically. Not going to happen. I'm keeping my risk low. If TAN can, however, stay above the 50-day moving average and climb back to its prior highs up here at 3160, I probably will add to my position, and then I'll turn my stop into a little tighter trailing stop. So you just may want to keep an eye on the TAN in the coming week. And now on to next week's economic reports. But first, please join us this coming Monday, August 19th, for our next session of Tony's Market Club. If you're not sure how you can make money in the market right now, please let us help. During our session, we'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. Can't attend our live session? No problem. The recording is available to all of our members just a couple of minutes after the session ends. Please know this is a low-priced, high-value opportunity to learn how to trade more successfully and how to make more money. So please join us. For more information, go to the link on this screen or simply click on the orange button below. Now next week, thank goodness, because we have enough going on, we don't have many economic reports. On Wednesday, we have existing home sales, our usual crude inventories. On Thursday, we have our usual jobless claims and natural gas inventories. And on Friday, we have new home sales. Again, please join us for Tony's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.